Every time when we are entering the market by opening new position, we are automatically involving ourselves into the risk. Because if the price will not go into our direction, we are losing the part of our capital. And by the way, closing position in minus, this is the part of the profitable trading. Because first of all, there is no trading strategy with 100% accuracy. And secondly, profitable trading by itself, it's when accumulative profit from the winning trades exceed the total loss from the losing trades. In the YouTube, you can find a lot of information about trading strategy and the new methods, how to open, how to close position, and not so many information about risk and money management. And by my personal opinion, this is the key factors if you want to be profitable in the long term. So today I want to open you something new, skills and methods how you can manage your risk and convert it into the plus. So let's start. In trading we have two types of the risk and you need to learn how to handle it. First of all, this is the local risk related to already open position. People calling it risk management, how to manage already open position in a very simple way, where to put the stop loss or the best stop loss placement. And the second point, this is the global risk related to our capital. We need to understand what kind of trading volume we should open in every position, and people calling it money management. So let's start with the risk management, where to put the stop loss, and slowly we will move forward to the money management. I want to start by answering to the people that are thinking that stop loss placement, it doesn't matter. In front of you, you can see the board where we implemented one trading strategy. I will not touch the logic, I will just show you how stop loss making the difference. So let's do like a few back tests and you will understand it. So in front of you can see gold, the time frame H1, we'll do the back test from the beginning of 2024 and the starting deposit of $2,000. So let me do some back test with the random take profit and the stop loss, and it's close all this period of time in plus, but total net profit $2,621, maximum drawdown 1,343. So if you'll pay attention on the recovery factor, and as you know, if you are watching my videos, recovery factor, it's very important if you want to evaluate the strategy. So this is the ratio between total net profit and the maximum drawdown, and it's supposed to be higher than 3. For my personal bots, I'm not choosing the strategy if it's less than 4. So I will go right now to inputs of this trading strategy. I will not even touch the take profit. I will just change the placement of the stop loss. And let's go to the results. And as we can see, it's totally different story. So final results is profit $7,400. It went up from $2,600 to $7,000. Maximum drawdown dropped down to 918, and this recovery factor from the less than 2, it became 8.7. But guys, the worst mistake, and sorry, but the stupidest mistake what you can do in the trading is to trade without stop loss and without take profit. So what I will do like right now, I will put the so high like distance to the stop loss and to the take profit, so it's almost will trade without that. And let me show you the back test, and it's most probably show for us some big minus. You see, it's even lost the capital. So never trade without stop loss. This is the first rule. The second stupidest mistake from a personal opinion, and nowadays a lot of the bloggers trying to sell you that if you can put the stop loss with the fixed pips. You can find right now so many strategies that make millions in the Forex by putting just 20 pips of the stop losses. Listen guys, in our trading terminals we have more than 200 or 300 instruments, and maybe you are thinking all is the same, this is the same charts, but different instruments, totally different volatility, and the trading strategy and the risk management should be related to the market. Stop loss, this is not just the level when we are stop losing our money or we are fixing our minus. The stop loss should be the level when for the price it will be difficult to hit it, you know, so we will have a space for the drawdown, and after that position will go into our direction. So the easiest way, if you want to know where to put my stop loss, or for example what it's supposed to be my distance, we are going to the daily chart. This is the this is the gold, and I'm adding ATR with the parameter of 21. So we will take statistic, you know, the average statistic for 21 days. What is the distance between high of the low? So we will find the distance of the daily range at the chart. So if we will check down here, we can see exactly 39.62. This is the value of your stop loss that you can put in every position. And right now I want to go, for example, to the dollar yen. You see, so dollar yen, this number, it's totally different, you know, so you can easily use this kind of things to put the stop loss in the simple way. But how to put it in the proper way? This is what I want to show you right now. I want to show you one scenario that even with the good placement of the stop loss, sometimes it's not enough to generate a profit. Imagine that you have account of $1,000 and you want to trade Bitcoin, you want to open buy with the trading volume of 0.1. So you are going to the daily chart, you took the value from the ATR to put the stop loss. And when we are checking ATR, the value is 4,192. So it means if your position will be hit by stop loss, you will lose in this current case more than 40% of your capital, which is not a business at all. So that's why there should be every time connection between the risk management and the money management. Of course, we are putting stop loss based on the market things, but it should be related to our deposit, because in the end, what we are risking our capital. So that's why, because of that, we create for you specific tool calling trend risk management. And let me show you how it's working. Right now in front of you, you can see the gold on the time frame H1. Now let me add on the chart indicator trend risk manager, and in the line of the volume I want to put 0.1, that assume we like to trade gold with every time the same volume 0.1. And this kind of indicator will show for us also three, let's say, conditions in the market. This is the trend, general direction of the market. Then if we'll zoom in, we can see inside of the trend two more conditions. This is the correction, this is the movement of the price opposite the trend, and also impulse, movement of the price towards the trend. So what this kind of indicator is doing, he's taking 10 last corrections, trends and the impulses, calculating the average number and comparing it to the last situation by giving us the size of the stop loss, you know, the value of the stop loss. So this average range, this is our stop loss where we should put, but also it's comparing current correction trend on the impulse to the 10 latest one. It's giving us, you know, that market, for example, right now it's more volatile. Let us check, for example, impulse here, you see. So all this previous one was small, but the last impulse is very big. So for example, if we want to open the position, for example, on the breaking this kind of impulse, and we decide to put our stop loss somewhere here, we supposed to trade just with position volume of 0.01, you know. So if I was showing you example based on the ATR, it's very standardized, you know. Here it's more flexible to the trading condition and also based on your strategy. By the way, all the logic that I put it here, I took from the ABC trading concept. So if you didn't watch this video, highly recommend you to watch. But for example, current correction, and if we want to trade just our correction, like for example, we are waiting when it will be some small retest and we want to open like one more position. This is the same story, because it's like small correction in comparison to the average, we can easily trade with 0.1 instead of 0.01. But if we want to trade like positional trading based on the trend, of course we can trade just with the 0.01. Guys, this kind of method of controlling my trading volume, I'm also start using for my personal bot ABC trading concept. So I'm highly recommend you to message me right now to get this kind of indicator and start using for your personal trading. And in the end, guys, I just want to tell you one thing, that all of us, we want to be profitable, but sometimes we are forgetting to be professional. Professional trading, it's like when you counting everything in the edge of risk, when you calculating the worst scenario, and when you will be prepared to the worst, profit will come also, you know. So when you are in the situation when it's a good opportunity to open position and to make profit, pay attention on your risk, because sometimes risk might be higher. Thank you very much for watching this video. I wish you just the green light in your trading terminal. See you in our next ones.